been a really long time since I made an update, so apologies. But I'm doing it. It's 11/21, 2021. I'm sorry. Yeah, that's it. November 21st. A few days from Thanksgiving here in the U.S. So I'll be celebrating that. And I'm sitting at an all-time high. Actually, I haven't made an update in a couple of weeks. It was looking okay. I was kind of in a dire part of the not really dire, but a low kind of dip a month ago, or maybe a month to a month and a half ago. But I've managed to somehow climb out of that. The account is an all-time high, and you're about to see it. I'm really happy about this. It's a little bit risky position, and I don't expect this to persist throughout the next week. Although Thanksgiving week has been kind of traditionally, good for me, but um, I'm not that sure it's going to play out the way I want it to next week. So most of the gains have actually been from Apple and JD, which are two of my biggest positions, but I have almost equally large losses from two other positions. So why don't we just quickly look through the market before I go through my own account? But here's my own account first of all, just to show you the number. I'm at 199,444. So I'm almost at 200K. Very excited about that. Super excited. I hope I hit it this week. I have not had an intraday 200K either. It's just been, this is the high. It was a little bit higher, I think, let me see, at this point here. Yeah, it was a little bit higher at 10 a.m., but that's the intraday high, basically. The account's never been higher than this. So excited to see what next week brings. Okay, so the big culprits here, actually, look at this heat map. This is the 1 week map. And Apple has been just tearing a new one into the markets, which I'm very happy about considering it's my largest position. Only Tesla kind of stands up to it, and maybe Nvidia, but both of these companies are a lot smaller. Apple being such a huge company, up 7% against a very mixed to negative market. As you can see, there's a ton of red on the board. So a ton of red. Like basically the entire, well, I guess Moderna is up. The entire market is more or less down. It's just select companies that are taking all of these gains. So JD's right here. I know it's a little flickery, but I have to scroll the mouse through the map in order to show you. I think you can see it. Oh, wait, actually you cannot because it's very zoomed in. Let me zoom out a little bit since I'm going to be on this website for a little. So apologies for this. I'm doing it on the fly here. All right, so you should be able to see it a lot better now. Okay. There we go. All right. Now JD is over here. And then Amazon, of course, you can see Amazon pretty clearly. This is the entire map for the last week in the markets. Now, in the account, I just want to show you real quick. Apple's chart, 1 week chart. Look at this craziness. It's up $10, 7%. This is the 1 month chart. Looks quite weird, honestly. 3 month chart. Okay, the rest of the account. Well, why don't I just quickly go through it, okay? So I'm a bit disorganized today. But I have a ton of options that are happening. I should have done this before I zoomed out. Ton of options. This is the ticker here, the strike price, whether it's a put or a call, expiration date, number of contracts, and whether it's a sell or buy. I'll just quickly scroll through it. If you want to find out, all the information is listed here, including the days change and percentage change on the right. So you can take a browse. You can pause the video at any moment to try to figure out the exact positions. I'm not going to be pausing here. Just going to scroll through them. And these are the equity positions. There are a ton of changes. I know I've been trying to consolidate my account to just a few names, namely like 8 names, but it's expanded again. I decided to buy Goldman Sachs. I want to talk about that, but probably not going to talk about it today. So buying Goldman Sachs, and also this ONL here at the bottom. That's actually a spinoff from Realty Income REIT. So I got this basically for free. The price of Realty Income dropped a little bit, like $1 or something, when this split. But now I have like $500 of this new office-oriented REIT, real estate investment trust. So those are all the positions. If you're interested in the account tab, this is the account tab. 240,000 under management here, including the $40,647 of margin. Probably the highest it's been. No, I think I've been a little higher than that. I've delevered a little bit. So these are positions, the positions ranked by total return. So Apple, JD, EBIX, Realty Income. And this is by equity, Apple, EBIX, JD, Realty Income. Notice a trend here. All my top positions are outperforming. Huge. All right. So that's the account. If you want to see the week, this is the week. And then what's up with this loading screen? And then this is the 1 month performance. So it's been quite volatile, especially the 3 month you'll see here. So it was up at 183, 184 actually. I think it took then 152, and now at 199. Very pleased with that performance. So that's about it. Okay, so I'm gonna go to the FinViz just to show you some things. You notice that I had some VIPS stock right here, VIPShop. So this is a Chinese company. It's a retail. Let me just explain a little bit about this company if you're curious. It's a online retailer, just like just like any other store, really, just like any other platform. Maybe kind of like Tmall or Taobao or JD or whatever, but it's been compared by financial writers to the likes of TJ Maxx or Ross online because it is a discount store, and the way their business model works basically is kind of like outlets, the way outlets work, but online. So all the unsold merchandise gets funneled through VIP shops and sold at a discount. And so they run promotions, they run discounts. And so a lot of people who want quality stock, not like investment stock, but, goods, clothing, brand clothing and shoes and whatever, makeup, they'll go there to pick it up at a great price. And so they serve two audiences. They serve the clients who are really price conscious and looking for good, deep quality items to wear or resell, whatever. And they also serve the big brands who are looking to offload large quantities of unsold merchandise. And so they have kind of two big customers, groups of customers that they serve. And so they make them both, they're a middleman. They connect them, because otherwise it'd be very difficult for these two groups to connect. Those groups wouldn't go into the Nike store and buy Nike shoes from the shelves because they're too expensive. And Nike is not interested in running an outlet, like a discount store either. So you see where the magic happens. So there's a place for companies like VIPShop, and so they're filling that void. Now, how big this website can get, app/online store can get, I don't know. But it's not like TJ Maxx and Ross in a sense that it's more of a platform. Like they've built it out really well. Actually, I have it downloaded and I've done some research on it. And I guess this is turning into a VIPShop, kind of like a video, even though I wasn't meant to be. Maybe I'll talk about it separately again at some point. But I really like the app actually. It's very cool. But they have, if you click on a brand, you can go to like their whole homepage, not actual homepage of the brand, but they have a store inside VIPShop where you can buy all the discounted merchandise they offer or they have, and also you can sort it by in all kinds of ways. And actually learned a lot about Chinese shopping behavior through downloading these apps. I also downloaded Taobao and Tmall, and I tried downloading JD, but I couldn't find JD in the US. Here, just some other, like a bunch of promotional JD apps. So I don't know how to, if somebody knows how to get the main JD shopping platform, let me know, or what I should be downloading. But there's just like some little offshoots that are, available here in the App Store for Apple. Anyways, I haven't tried for Android. So without talking too much about VIPShop, it took a big hit. It went down 20% on earnings, and that was a lot. But it's coming off of a backdrop of like another 50% before that, or more actually, more like 75% decline from before that. And if I show you the chart of VIPShop, which I think I will, look at this chart. So this is at 46. The high is at 46 here. And now it's $10. So it's very, very low. A very big crash. And rightfully so to an extent. Oh, I didn't show you. There it is. So 46 at the high here and $10 here at the lows, which is the current price. And for the most part, it's justified because they've been missing both on revenue and earnings in the last 2 quarters. But they're just missing analyst expectations. However, they continue to grow, albeit at a slower pace, their revenue and overall gross merchant GMV, right? I think gross merchant value. What's GMV? Gross market value? No. Gross merchandise volume? No, I think it's value. I don't know. Either way, like total goods sold, right? Like the in units, in currency amount. So they continue to grow that. They're not growing their profits, although because they are. Hold on a minute. Is this mic on? Oh my goodness, I got scared because I recorded a really long video one time and the mic wasn't on. That was a real big disaster. So, okay, I'm glad it's on. So anyway, it's growing that. So it's growing its reach. It's growing its subscriber base. So it started this subscription service as well, and so it's growing that too. So the numbers are looking up, even though they're getting squeezed here. Obviously, they're having a bad couple quarters. I think that the Chinese consumer is actually a little bit worn out, apparently. At least that's the terminology that I'm getting from people here, and not here, online. All these experts and analysts. So even the singles event shopping extravaganza posted figures that are a little bit under expectations, although they still managed to somehow break records. And people are still not happy. I want to briefly go over some numbers here. I know I've done this before, but this is like, I'm obsessed with this company now because of these valuations. It's just so attractive. I can't help it. So I'm going to go into it. Let's do it. VIPShop's VIPS, VIPShop. That's the symbol, VIPS. Look at some of these numbers, all right? They're the most incredible thing that I've ever seen in investing world. Yeah, there's a bunch of downgrades, whatever. That's because the last 2 quarters were weak. I don't think that it's gonna be this fast of a downtrend, though. I think it's kind of returning to the mean because I think that the late 2020 quarter was a bit of a part of the year was a bit of an anomaly where VIPS received a ton of orders during the pandemic months. So, oh, by the way, just real briefly, before I even talk about this, I noticed that some of these episodes that I'm doing are receiving ads. So if you're watching an ad, like, that's not my fault. This channel is not even monetized. So it's just Google, like, trying to be clever, all right, collecting money from me. So I'm kind of mad about that because it's supposed to be like ad free, I guess, content here. Okay, so it's not. I'm not receiving any of that. So I don't like it. You guys shouldn't be watching ads for this. Okay, back to the topic at hand here. Look at this incredibleness. Okay, so first of all, the market cap currently is 6.8 billion US dollars. This is in US dollars here. And the income is almost a billion. Let's just call it a billion, which puts it as 7.86 price to earnings ratio, which is very impressive. Not only that, though, the sales of this company, so the revenue here, is 18.5 billion US dollars. So that's quite large for a company that's, although slowly, growing. $18.5 billion in revenue. So that's 3 times the market cap. 3 times. Puts the price to sales ratio at 0.36. Very impressive. Not only is that impressive, but the cash per share at the moment is 3.76. 3.76. So take that out of the share price. That is extremely impressive. Extremely impressive for just buying the company. Although it does tell you that they have a lot of cash on hand they haven't used. So it's just sitting on their books, not being actually utilized to grow the business further or increase somehow, either grow the business or make other improvements or doing things like buying back some of their shares, perhaps. Or they don't want to pay. They shouldn't be paying dividends. But if they don't know how to use the money, they should be just buying back shares. In my personal opinion. Okay, so this forward PE is obviously bogus, right? We're not gonna have a 1 PE. Okay, so I don't know how they make that calculation. Probably this growth that's not gonna materialize, which is quite substantial. It looks like. But one thing that I really like about this company is they operate with no debt, and debt is great, especially with inflating currencies. Don't get me wrong, I understand that, and debt is good. But if you're having a hard time, like if you're not so sure about the growth of the company, then it's tough to justify taking on a lot of debt, I think, in my opinion here. So they have no debt, basically. Other things I really like about this company is look at this return on asset. That's 10.1%. That's very good. Okay, especially for a business like that. Return on equity is 19. Return on investment is 15.9. Very good. Gross margin is 20%. Okay. Operating margin is 5%, and so is profit margin. Now, profit margin at 4.8% is actually really good. For something like a discount store that sells mass volume like this. I mean, that's probably higher than JD's profit margin. I'm not sure exactly what it is. I don't want to look it up. Another thing that I really like about this company, look at this number here. It's my favorite. When I see this, a low employee number, only 7,500. They probably hired some more people. Maybe it's about 10,000 now. Probably. I don't know. I'm not sure when this figure was last updated. I really like to see that in a company where they have few employees, fewer things that can go wrong, fewer people to manage, because you're gonna have to hire less people to manage these people, right? So middle management is minimized that way. Not only is middle management minimized, but obviously, if you can make a lot of money with less people, that makes each employee more valuable to you, and all kinds of good things come from that. Okay, so this is incredible. I don't think I've ever seen anything like this. A book per share here. I don't know how accurate this is, but it says 7.15. The price is 10. Target price by analysts here apparently is 19.24. Realistically, if this continues to grow, even though it's Chinese company, it's probably higher than that, because these figures are just incredible. I'd probably put it, more than half of, yeah. Yeah, I mean, actually, that sounds about right. Maybe a little bit higher because it's growing still, and that's the reality. I want to show you the VIPS position that I do have. So I have a bunch of puts sold against it. Let me actually zoom in here. I think it's time that I zoom this back in. All right, very good. So to show you some of these positions that I have, so currently I have exactly $5,000 worth of VIPS, because my average cost price is 12.03 US dollars, and I have exactly 500 shares. And then here are my options. Currently I've sold 5 puts, and let's see, 5 strategies, sorry, because I also bought a few calls. I have some calls that I bought, but then I've sold some puts. So anyway, I sold puts in January 2022, and I sold puts at December 17th, and some that expire at Thanksgiving here. 6 of them, 6 contracts. These numbers are really high. So if I had more money, I'd actually play this and collect this premium, because I don't think this company is going much lower, to be honest. It could. Let's look through the charts. Here's the big drop after earnings from 12.22 all the way down to like 10. This is the 1 month chart, 3 month chart, 1 year chart that you saw there on Finviz. And this is the 5-year chart. So it's not as far down as it has been in the past, but it's as far down as it has been in 2019 in October. It's as far down as it was, all the way back, as far as the chart can go. 2016, probably 2015 then. And in 2015, by the way, this company did not have the revenue that it has now. It doesn't have the clout that it has now. It doesn't have the subscription model that it has now. It doesn't have some of the initiatives that they started back then. It also didn't have the backing of companies like Tencent and JD that are helping them expand their reach, because their model is a little bit different. So it's hard to see. I don't know how many shares they've sold since then. I haven't looked that up. So if they have sold a lot of shares, then that's fair. But if they haven't sold any shares and it's still the same share count, I mean, it's ridiculously undervalued. So if there was no risk, if there was no political risk with this company, I would probably put everything into it. Or at least 50%. How about that? At least 50% of the account I would put into it, or I'd play options around it. If the revenue starts going down, then I might be a little bit concerned, and I would not. I would put maybe a very low position in there. But since the revenue still keeps climbing, I'm really not concerned. The moment the revenue starts dropping down for like 2 quarters in a row or three, then I might exit the position. As long as it's growing, no problemo. Still in it to win it. So this is my update. All right, so that's it, guys. I mean, I'm at a record high. I'm almost 200,000. I've got some new positions here, Goldman Sachs, which I'll probably talk about in some other video. Hopefully, I make one next Sunday. I know I've been extremely busy. I can't update you on what's going on in my life right now, but I might in the future, near future. And I've been extremely busy, so I apologize. Like I'm slipping, but I just can't. And next week, hopefully, and on Sunday, I'll make another video trying to update, especially if I go to an all-time high. No, if these Chinese stocks go up during the week and Apple continues to like tear through the charts, then I'm scoring some all-time highs and over 200,000. So what I'm curious though is how you guys are doing in this market. Like, first of all, do any of you own either Apple, Alibaba, or VIPS or JD, or even some of my other holdings? I'm curious to know what your opinion is on those. And even if you don't own them, I want to know your opinion. Also, I didn't talk about Baba actually. Let me talk about Alibaba real quick. So Alibaba has been just terrorized by the markets here. This is on earnings. It dropped from 161 to like all the way down to like 140. So that was a huge drop. And this is a 3-month chart. The 1-year chart looks absolutely brutal, just crushing. All right. So my thoughts on Alibaba, real briefly, I'll put them in here, is that I'm still bullish because even though their retail model reminds me a little bit too much of eBay versus Amazon, which would probably be most analogous to JD at the moment, even though they're vastly different countries. Well, that too, companies in different countries. I think that the advantage that JD has is because they build up this entire network of JD logistics, and they don't have to be like Alibaba that basically outsources everything. They collect the margin, but also don't have that many real assets besides their network of their software network, right? However, they are expanding in things like they're starting to build chips. They're going into things like cloud, right? They're starting to provide, they have been providing cloud, and it's becoming profitable, and those profits are growing. So that's really promising. The only thing that's kind of taken a hit is the rate of growth of their legacy business. The rate of growth. It's still growing, right? The legacy business is still growing. It's just missing the expectations, the rate at which people will think it will grow. So that's why it got crushed. So it's growing. It's just not growing fast enough. And so people are like, oh, boom, let's take it down a notch, 20%. How about that? But I do have to admit, though, after testing Taobao and what was it, Tmall? Was it? Well, their other app. I gotta say, VIPShops has by far the best shopping app from my perspective. Everything's really well organized. Like the color schemes flow. It's really easy to find stuff because I do actually recognize some Chinese symbols here and there. So it's easy to find stuff. It's easy to browse. The stores are made really well, and they don't overwhelm you with information, and it looks very professional and polished. Whereas Tmall and Taobao, they look a little like childish and cartoony. Things load up weirdly, and it looks cluttered. Like the products are not organized very well by categories. Just run some random products at the front. I really don't like them. So I do have to add that in there. It does matter. Like the reason I used Robinhood as a brokerage is because I like the feel for it. It's not because I get a better deal, although it does help that it's free, but all the other brokerage platforms are free now. And they probably have faster execution and they probably have more security, but I still use Robinhood because the interface, like I like the interface. I like browsing through the app of Robinhood. So that's why I use it, you know. So I think it's very important. At one point, that's all the companies will be able to compete on is, this factor, this usability interface factor. But that's a topic for another day. I've made this video extremely long. I'm trying to make up for the fact that I haven't been making any, videos in the last couple of weeks. And hopefully I make another long one next time. Hopefully I make another one during the week if I have the time, I'd love to do another update, especially if I get another all-time high and I'm sitting over 200K. That'd be a day to celebrate, because then I'll be only 5x from my goal of $1 million with this account. So, all right. Let me know how y'all are doing with your accounts, and if you own any of these positions and what you think about these companies. You own them or you don't own them. But if you do comment, like, let me know first if you own the company, if you don't. So before you make the remark, so I put it into context. All right. That's it for now. Okay. Peace out.